Money Garden on Steroids, where we grow the rate of growth. So I've been hearing lately about some things going on with gold, and looks like I will be making some purchases of gold or profiting from the upside of gold, whether probably through options. I might just buy some more gold. But I wanted to talk about what is going on, what could be going on, and just to kind of show you my framework and if you think that this might be something you're interested in, look, see what I have to say. And of course, always do your own research and make sure you're comfortable with the decisions you make for your own situation and portfolio. So there's been a lot going on with gold. Now, if you are one of my friends or family who I talk to on a daily, you'll know that I have always been, well, not always, since COVID hit and the central bank has been printing a lot of money, I have been a pretty big fan of gold. Now, it's kind of gone back and forth in terms of its price, but right now it looks like something big is about to happen, in my humble opinion. So, for one, you'll notice if you do some research, and I've got some articles here, it really doesn't take much if you want to just Google it yourself. Central bank gold demand soared to 55-year high. Several articles have come up. It's really not hard to find. Now, what's interesting, if you take a look at this chart, and this is not the only chart, you can notice there's actually several, well, there's more than one. There's several that kind of give the same thing. But again, make sure you're comfortable with your decisions when you do your research. But when you look at the gold purchases per year, you'll notice that some massive buying has taken place in the third quarter, and it's now moving into the fourth quarter. And some of these others, they're not really reflecting the fourth quarter purchases. And a lot could be going on for that. What's most interesting is it's likely coming from a central bank, but whoever is making these purchases is not advertising it. So when the U.S. central bank buys gold, they let people know. It's usually kind of clear, right? The Fed kind of talks about it. And the same with most central banks. Now, it could be, I suspect it's coming from some of the countries who are antagonistic to the West and kind of the largest population, so antagonistic to the largest number of countries. So China, Russia. I mean, I don't know if North Korea is in that market or Iran is in that market, but it's likely either coming from them directly or related to them. It's a signal, though. Earlier in the year, not excuse me, a little bit ago, before Russia invaded Ukraine, China and Russia were buying a ton of gold, and they knew what they were doing. They knew, or Russia knew, they were going to have a lot of sanctions, and whenever they decided to invade, and they knew that they were going to need the gold in order to survive, given the global sanctions. Also, China has bought a lot of gold, but they did it a little bit different. Their central bank policies have kind of been the inverse of most of the rest of the world. So when the rest of the world was loosening, they were tightening, and vice versa. So that's kind of where those were coming from. Now, I don't know what's going to happen. It's hard to say. Is this a signal that China plans to invade Ukraine, and this will be their way to stave off the economic impact from whatever would happen? And it's not entirely out of the question that they would. The U.S. has just blocked them from getting some of the higher end chips. So this might be their way of trying to stay relevant in the top world economy. It's hard to say. I hate to speculate without at least noting that it's speculation. But what I can tell you is that there has been an absurd amount of buying. Now, what's interesting is it does not seem to be appropriately reflected in the price. There can be a lot of reasons for that. That can come from, of course, price always comes down to supply and demand. But let's take a look at the year. So you can see that through the year, the price of gold has been pretty high. And then as of the third quarter, it went up, but then it went really hard down. And it has started to spike, but if you'll notice, it's not proportionate. Now let's go back. Let's go back a few years, even 5 years. It's like, look, it's here when it has topped that multiple times. And a lot of people will give their reasons for why these peaks came, and those are reasonable. Depending, there are some reasonable explanations, I should say, as to why those peaks came up. Excuse me, these peaks. But I would still definitely say that the price is not currently accurately reflecting the price of gold. And part of that could just be that other countries are selling a lot of gold, like Ukraine. Some say Russia is getting around the sanctions and moving it through other places to just get the gold to affect the supply and demand curve. I would still say that it's not proportionate, and whatever is happening, this is a signal of, it tells me I think I'm interested in buying gold. Now, if we were to buy gold, you might want to, of course, you want to think about who to buy. And there's a few that I happen to be a pretty big fan of because I'm overall a pretty big, I've always keep my eye on gold, at least since 2020. One of the main reasons, of course, we all know there's relatively limited supply of gold, not limited supply of paper money. So that's one thing that has not been reflected, where inflation has been pretty high. And I would argue the inflation that I see with my eyes, without doing the research, I don't have the Beige report or the reports from the Fed, I would say inflation has been a lot more than 9% in a year. That seems pretty absurd, really. But again, I don't have the actual data. I can just tell you that when I look at the price of gas, or I look at how much $80 of groceries buys me, it does not seem appropriate to 9% interest. So anyway, or 9% inflation. So when you consider that there's limited amounts of gold, they can dig more, but the more they dig out, the harder it is to dig out more. So the relatively limited amounts of gold, but of course there's just lots more paper money. So my expectation is that whenever that correction comes about, it's going to be a thrusty, powerful correction, and the price of gold will, and other commodities will climb fast. So that's in general on gold. So I follow gold. So one of the gold companies that I like to invest in is this AUI. They're actually a gold miner, and I love them because you get all the upside of gold, but you get it at a lower price. And it's a company who pays a pretty decent dividend. Now, if you want to look at the company, so if you think a 2.4% dividend is pretty decent. Now, here are some other things that you just might want to look at to determine whether or not you're interested in buying it. The quick ratio and the current ratio are pretty good. Since this is a company, of course, they have to keep the doors open. You don't want them to file for bankruptcy. But these are ratios comparing whether or not they can pay their bills, right? The difference between the two, one measures their current assets, their cash, compared to their bills, their liabilities. Another one measures that according to their inventory. But it's the same basic thing. It's a measurement of whether or not they can pay their bills. So they seem pretty decent there. They're relatively well ran. Now, the other thing that when you're looking at a dividend stock, you want to look at the payout ratio. And you'll see the payout ratio is a very healthy 44%. So if you're not familiar, the payout ratio is the amount of dividend paid to shareholders compared to their net income. So if a payout ratio is too high, it can signal the company is trying to keep their dividend payments high for the shareholders at the expense of the company. And a couple of stocks that I'm going to bring up in a moment are actually like that. But I still am interested in them, and I'll explain why. But that's what the payout ratio is. So they've got a very healthy payout ratio. Your point of entry is very cheap at $5.12. Let's just glance over at these. This is not a full analysis of their financial statements, but just a quick kind of glance. So here you can see the years. We've got you can just see like 2021 is at the end, depending on what you use. Sometimes they reverse it. Now, I like to look at, so here we're looking at the balance sheet. I like to look at the cash. And this is, if we scroll to the bottom, displayed in millions. So this is important to remember. Sometimes it's thousands. Usually it's millions though, but you just want to check. You don't want to assume. So they've got a decent amount of cash. Let's look at the income statement. You can see that, again, this is displayed in millions. And if you look at their net income, they've been able to grow it. So it's a well-managed company, and their point of entry is pretty cheap. So this is not one that I plan to buy and hold forever. This isn't a Warren Buffett buy a fabulous company at a fabulous price. This is, I want to benefit from the price of gold going up. So this is one that I plan to buy. Now, another one that I'm a big fan of is Rio. And here I'm going to show you. So we've got Rio. Now you'll see the price is lower, or excuse me, much higher. But you'll notice that their dividend is phenomenal at 11%. You can take a look and see the fundamentals. We've got the, again, the quick and the current ratio are good. Anything above 1 is healthy. It's a well-run company. Now we can take a look at the payout ratio. Now this payout ratio was really high. So again, a good payout ratio is like healthy is 30 to 50%. This is pretty high. But I'm still okay with it because, again, I don't necessarily, I mean, maybe, but right now my plan is not to buy them and hold them forever. My plan is to profit from the future growth in the price of gold, the future, that whatever that sharp rise is going to hit, I want to profit from it. Now, if we take a look at the balance sheet, again, so we want to look and see this is measured in millions, I'm sure it is. And you can see they have plenty of cash. So yeah, they're paying a big dividend, but it's not to their detriment. They're a healthy company. Now let's look at the income statement. And you can see the revenue is growing at a good rate. Another good sign. We can see the income operating. Well, let's look at the overall net income. Again, really, they actually did really well in the last year. So it looks like a pretty good company. I'm comfortable with this, since I really am just looking for a short-term purchase. And short-term really can vary anywhere from, a month to less than a year. That's technically short-term. I'm just going to buy it until I see that spike in the price of gold. Now there's another one that I'm going to bring to your attention, and that's a BHP. And we'll see the same thing, a really good dividend. And you're going to see the same thing. It's actually pretty similar to Rio. You'll see that, again, very healthy quick and current ratios. You're going to see their dividend payout rate is really high. So again, that if this was a company you wanted to buy and hold forever, I'd be a little cautious. I might be more comfortable with it. They may not have a lot of like research and development going on, which might be why they're choosing to pay it out instead of holding on to it. But you can see they actually have a decent amount of cash. So here we're looking at the balance sheet, again, in millions, of course, and they've got, that's $5.7 billion on hand. So they're still a healthy company. Their income statement, if I remember correctly, theirs is a little bit less. No, theirs is very healthy growth. Again, the payout ratio is pretty high, but they are just trying to have a good payout for their dividends, which is fine with me, again, since it's just a temporary holding. Now, the reason that you might want to hold more than one stock is you don't want one position, so like a position of gold, right? You don't want it to be dependent on just one company, because who knows, AUI, they might have something might happen, and that could impact them. And the same with the other two. So, you don't want to just put all your eggs in one basket, right? You want to kind of divvy it up a little bit. And the other reason I like these is that they pay a ratio. They pay a pretty decent dividend. So when my goal is not the long term, my goal is relatively short term. When the price of gold peaks and it really kind of has a strong thrusty move upward, when people start to flood towards gold, they're going to look for this too. They're going to look for a really solid dividend. So, these are the positions that I'm going to be looking at pretty closely, I'm probably honestly going to buy some options. We're going to take a look here at the options just to see if I think about it. I might just hold them. I might have some options. Options are great because they really amplify the growth. They amplify the loss too, but it's not as dangerous. You're only gonna, if in the worst case scenario, you're only going to miss out on the premium. But it's it's not like it's free. So we're gonna look at calls only, and we're gonna pick a time frame. So right now we're looking at BHP. I think that whatever may happen here will easily happen by May of next year. So we're gonna look at calls, and let's just say we look at the current strike price. It's typically usually where I aim. So you can see that one option is only $640. Considering the disproportionate upside, considering the downside, I'm probably gonna go with options with these. So here you go. So here's just a current opportunity that I found that I wanted to share with my friends and family. I'm very grateful for your time, and I hope that you're grateful for me just kind of posting what I find. Please like the video. It really does help the YouTube algorithm. Please comment. I want to hear your thoughts. I do not consider myself the know-all guru. I really need other people's perspectives to kind of balance out with my own. So please put in the comment section if you agree, if you disagree, if there's research that supports this position that I haven't considered, or if there's some research that counters it that I haven't taken into consideration. And if you're watching the video, look for the comments. I hope that over time I can build a really solid community where we all can kind of research together and we can all benefit from each other's information and perspective. The real purpose of this channel is to grow your wealth. And when you become dedicated to growing your wealth, growing the money that you have, whether it be small or not, it will be big. And if you have a decent amount, it will be bigger. And what's beautiful is once we learn and we take ownership of our positions, we don't need hustle culture to retire comfortably. We've done it ourselves. We've done it through passive income. This is a lot easier building a YouTube channel, doing a little bit of research, investing my money, than taking a second job. And no disrespect to people who take a second job. That's a lot of work, and kudos to you. But I would much prefer to invest my money, let it grow exponentially, than to work like a dog 7 days a week, And again, I've had to work really hard, long hours over the course of my life, and there's a good chance I get there again. So no disrespect if that's your current place. But if that is where you are, or if it isn't, this is the channel you need to look at, because this is about helping you to turn the tide so that you don't have to in order to maintain and in order to retire comfortably. This is about growing your wealth so that you can take your life back, so that once you've built enough money, you can have your good, solid, regular 8 to 5 and be comfortable and have a good, nice retirement sitting there. So anyway, thank you so much for your time. Have a great day.